Hello, this is Steve Malone with Compass Effects. Hope you're doing well today and getting some good trades. Well, the euro dollar today made a strong move up, breaking above a high that was set back in November of 2011, stretching up to 34.96, coming pretty close to the 135 option barrier that was protected today by the People's Bank of China. So where do we go from here? And that's been a question I've had from folks in my trade room and other emails I've been receiving today is where do we go from here in the euro dollar? So I want to give you some of that information. Now, obviously in the intraday charts, we see the market baseline, the TDI up pretty high. Now, here's food for thought. Again, we've been talking about in my trade room, be careful of hidden divergence. Hidden divergence is a continuation indication in the marketplace. So when you have higher lows in price and lower lows in the Trader's Dynamic Index or whatever oscillator you may be using, that is a sign of potential continuation. So in this case, if the TDI was to roll over and come down to the 50 level, so the green line, red line, maybe even the yellow line coming down towards the 50 area, but price just stays somewhere right in here in a range, then we look for it to push higher. And I'll give you some information as to why it could go higher here in a moment. But where to? Well, if you take a look, I'm going to step out a little bit on my 30-minute chart and move this down a little bit. The blue line represents this break of 34.85 in December of 2012. And so we're kind of sitting up on that. Now, for the week, based upon the average daily range calculator, we're looking at a move from basically the open of the week. It stayed pretty flat here and has moved up almost to the weekly mid-high. A break of the weekly mid-high, we would see it go up to 35.56 area. Now, for those of y'all who have the ADR Pro calculator, one of the beautiful things about it is it automatically gives you daily targets as to where we expect the market to go based solely on the average daily range. In the average daily range calculator, we'll just scroll down and I'll set this to yes, and we'll look for where those levels will be. So currently what we're looking for is if the market continues to do what it's been doing, we have a push up here to about 35.35 overnight, possibly in the European session, maybe into the US session. Now that's given that we have some good economic information coming out of the Eurozone with some reports overnight. If we fall back down, then we have an ADR low target of 34.44. And if the market comes back down, my take on it is that we possibly will test 134. We might get as low as 133. It was very interesting to me today in my active trade room that when the euro is not doing so good in the marketplace, we have a lot of folks talk about the euro. We have folks from the ECB talking about how good the euro is. We have the Fed or other people talking about the euro. Interestingly, when the euro is doing well, I didn't hear a word from anybody from the ECB today. Didn't hear much at all from Eurozone leaders today regarding the euro. So I think the intent here is to see the euro continue to rise higher and higher. Going over to the weekly chart, I've noticed over a period of time that we've had a setup of an inverse head and shoulders. Here's a shoulder, the head, and another shoulder. Typically, we look for this shoulder to be higher, and it is. This low is higher than this low back over here. We have a sloping neckline to the downside, not really favorable for a strong upward move, but nonetheless, we've seen that move up. And look at this. Going back to a high that we've had back here, if I run my fibs from that high to this low point, we're sitting right at the 50% level, sitting right there at the 34.90 level. Now, typically in an inverse head and shoulders, once you get up to where the neckline started, then we're looking for progression higher. Well, how high do we go from here? Well, make note that based upon a weekly look of this, that there could be the possibility of going all the way up to about the 138.32. That's the 618 retrace. Okay. Now, if I step back closer to the market here, let's just look for previous highs that we had. Now, again, today we're getting up to a high over here. We attempted getting up to about the 35 level. I think a break of the 35, we come in right there. See this high back here? That high comes in right in the neighborhood of about 35, 135.35. So where was that on our ADR calculator? There's the target. So not only do we have the intraday perspective of saying 135.35, we also have a weekly perspective because that was a previous high seen back here in the week of November 27th, 2011. So there's a possibility of getting up to that level. Now where do we go? Well, we start looking at previous lows and previous highs. Going back in time, there's another low point right there, and then another high point just up above here. So as we start progressing upwards, some are looking for a push up to 136. Don't know if that'll happen or not. We do have non-farm payroll coming out at the end of this week. If the non-farm payroll is better than expected, my take is that we'll have risk on appetite in the marketplace out of the dollar and into risk on scenarios. Given the ECB's leadership wanting a higher euro, there's the potential to see that euro dollar push on up to 136 if we have a strong, better than expected non-farm payroll at the end of the week. Again, that's what I see right here. Let me just do one last point. If I go from this high, the low point right here, from that high up to the neckline that I drew, and then simply place that neckline on our break where we broke right there, believe it or not, that puts us all the way up here to right at about the 139.20 area. Some are expecting a potential push up to 140. If you take the measurement all the way down to the low point and then carry that over to here, you can see that that would put us up near the 142.20 area. So, there's a whole year ahead of us. Don't want to get too far ahead of myself, but that is what some of the Euro bulls are looking at forthcoming. And right now, given the ECB's leadership and the positive tune that they're having on the euro dollar, there's the possibility of continual. You don't want to fight a running bull. Just go with it. So at this point, I expect a potential break above 135 if the hidden divergence continues. Now, if this falls over and price follows it down, look for a possible move down to 34.40 area, then down to 134. If it drops in lower than 134, maybe down to 133.60. But again, as I've noticed in the marketplace, anytime the euro is going south, we're getting a lot of people in the market talking it back up. From Mario Draghi through all the ECB members, it doesn't matter. We get a bunch of people talking it back up. Again, keep your eye on the bigger picture because based on an inverse head and shoulders pattern, the only direction right now is up. This is Dean Malone with Compass FX. Hope some of the information I've shared with you will help you in your trading. Y'all make it a great day. Get some good trades. Talk to you next time. Bye-bye.